I know I'm going to put on my lipstick.
Oh, all right. We are going live. I have to edit one of these.
Morning, everyone in Facebook land.
Good morning.
Happy Monday morning. It's been a beautiful, beautiful weekend here in Chicagoland area. Right now, Libertyville. I had a great birthday yesterday, so I have to thank everyone for the birthday wishes. It was really, really fun. It was actually on Saturday, but
Party all weekend.
It's a party month. And that's why I love the summer. I think the summer is really fun. I know a lot of people like the fall because of the change of colors. Some people love the winter because of the snow, but summer's my favorite season, in case you were wondering. But anyway, we come to you on this beautiful day to share Dina with you. Dina's our expert on all things long-term care, disability insurance, critical information all women need. I can't even say it enough because women are going to age alone, right, Dina?
Yep.
We need to make sure we have the welfare, the oversight, the health care, everything that we need to take care of ourselves so that our families, we're not a burden to our families.
Right.
So we're so glad that Dina's here. Maggie's left us for a bit. She's probably doing some technology guru stuff in the background. So Purse Strings was created for women so that women had a place to go, a resource that they could access online at pursestrings.co to ask their questions, to get some financial information, and moreover, to really connect with those financial professionals who are going to listen to them, provide them the respect and dignity that they deserve, talk about anything financial, and help them, steer them in the right direction to meet their own long-term objectives. And I'm getting a bit of an echo, Mags.
I'm back.
Yeah. So we're happy to have Dina here today. Long-term care is kind of a scary topic. Are you getting a feedback, Mags?
Yeah, I'm hearing that.
Might be right. Okay. So what I will do then is just pass it over to Maggie.
All right, that sounds good. Not a lot of people talk enough about long-term care. That's why we have Dina here today. I'm echoing too, but that's fun.
Just to take it over. I don't hear the echo. I know.
It's technology these days.
We'll just wait for a couple people to get on and then we'll get started. I had to figure out our Facebook group thing, but we got it. So Dina, you're in sunny California.
I am. Yeah. It's very humid out here right now. I don't know why. It's like Florida.
It's like Florida.
I know. It's very humid.
Dina, what we were talking about on Friday, we were talking about like different funny things that our professionals do, or like that make them human. What did we come up with that was yours? You said something funny.
Oh gosh, Maggie, that was 3 days ago. I
know. Well, we were talking about, one of our professionals has like a bionic hand. One of our professionals like trains dogs professionally, and just these different stories that just come out and make them human. It's funny seeing some of our professionals like on Facebook, and I'm like, wow, they got a lot going on.
That's so fun. We just did a big family reunion with my mother-in-law and my kids and nieces and nephews. So 13 of us all just got together and went to Nantucket. So that was really fun.
That is
We're all
fun.
still talking, which is the good part.
Isn't it great that finally we can get together and just be with one another and enjoy each other? And boy, we've really, really learned the importance of relationship, of being close, of hugging one another and living in the moment, right? We've really kind of opened up the door and we're all running around scoring and getting together and connecting, which is really a beautiful thing. So
it is.
It's been really great. Yeah.
All right. Well, let me introduce Dina and we can get started. So Dina is from BGA Insurance. And she shops the market for best options to protect clients and their families. She specializes in life and long-term care insurance and really sees the value in the hybrid combination products. As a wife, mom, daughter, sister, and friends to many, she believes in protection. The ramifications of dying too soon and living too long can be catastrophic to ourselves and our loved ones. So she strives to be a resource and expert in her field so women can make informed decisions and sleep at night, knowing that we are all well protected, which you're absolutely right about women always looking for that kind of protection for ourselves and our families. So we're excited to learn today life and long-term care before negotiating the divorce. So with that, I'll just give you the floor.
Okay, and you have my PowerPoint as well?
Yeah, I do.
Okay, so just a couple things. So we're going to talk today about the divorce settlement, but what I want to do is bring up not only divorce, but just planning and protecting in everyday life. You know, we have a lot of insurance. We have insurance for our cars, for our homes, for various, valuables. We have a lot of insurance policies. And unfortunately, there's so much insurance out there that we put it in our safe or we put it in the file cabinet and we don't review it as often as we need to. So I have a lot of dear friends and dear family who have gotten divorced. So what I want to do today is focus on divorce and some mistakes and some things to think about with life and long-term care insurance as it relates to divorce. So with a divorce proceeding, of course, we know that there's a lot of moving parts. There's a lot of attorneys involved sometimes, or there's mediators, and there's a lot of negotiation. Unfortunately, life insurance policies and long-term care and planning for living a long life and aging really fall on the back burner when it comes to the divorce decree and the attorneys as well. So what I want to do is just bring that up to the front right now. It's not the most important thing, but it is important. And if you plan and protect properly, it can save a lot of problems. So like I said, I've had a lot of friends and family that have gone through divorce. And when I say a lot, especially on the client side, there's been people that we work with at BGA Insurance who have gotten divorced, and I've seen the good way and I've seen the bad way. So what I want to do here is talk about some ways that we can protect you and your families with life insurance and long-term care the good way. So we are BGA, and my name is Dina Mabry. Stephanie Abbott works with me, and we place life, long-term care, and disability insurance. We focus on those three items only. And what we do is we shop the market, we have all the carriers, and we can help clients in looking at their beneficiaries, looking at their ownership, looking at who's paying, because we have access to all the carriers. So we're a resource to anyone who would need us to get access to the carriers. Let's go to the next slide. So the top 10 things to know about life and long-term care before signing, and then in your next chapter of life, because it doesn't always stop just when the divorce decree is signed. We also need to think about protecting ourselves as we live later. So in the red, it says, leave your life insurance to the ones you love, not the ones you used to love. I recently met a woman who was married, and unfortunately her husband passed away. Well, he had a life insurance policy before they got married, and the beneficiary was his mother. She was not on the policy, and when he passed away, she got nothing. All the money from the life insurance policy went to his mother. And unfortunately, on the life insurance, there's a beneficiary, and whatever is written there is who gets paid out upon death. So it's important to check your beneficiaries and know your beneficiaries. So number one, a comprehensive review of current life insurance policies in force and just an assessment of needs. If we're insuring alimony or we're insuring child support, it's important to know how long you would need to protect that income should the person who's paying that alimony or child support pass away. Term insurance. I do find that a lot of clients don't know how long their term insurance goes for. Is it a 20-year term? Is it a 30-year term? It's important to know those dates and know how long the term is locked in on that pricing. Permanent insurance. Permanent insurance does have cash value, and that is considered an asset upon divorce. So it's important to know that if you have, let's say, $50,000 of cash accumulation within a life insurance policy and the divorce is happening, that is considered money that needs to be divided. Are there tax consequences? That life insurance could have a tax, or that cash accumulation could have a tax consequence if the cash is more than what you've paid into the policy, and we can help look at that. And then the owner and beneficiary updates. So let's say, for example, you have a husband and a wife that are getting a divorce, and let's say they have 3 small children. If the husband currently has a life insurance in force right now, it's important to look at that policy and the ownership, the beneficiary, and the payer of the policy. And that can change. You don't always keep those things static. For example, I work with a client, and every January we have to talk because her ex-husband is the payer of the life insurance policy. Per the divorce decree, he has to pay for it, but she is the owner and the beneficiary. So every January he tells her that he's paying the premium, but he doesn't pay the premium. And with life insurance, what happens is 30 days after that premium is due, you have a grace period, and then the policy will lapse if the payment isn't paid. So we have to continue to talk to him and say, please pay the premium, please pay the premium. And he doesn't pay the premium until the last day before it lapses. And I understand it's a game and I wish it was different, but it's not. So we can help with that, understanding the owners, the beneficiaries, and the payers of the policy. Never let a policy lapse without reviewing it first. I have a dear friend whose ex-husband had an addiction issue, and at the courthouse, we were standing there together and we were trying to figure out who's going to pay for the policy, how it's going to be, who's going to do what. And it's just so much better if we talk about that ahead of time. And just so you know, not everyone can get life insurance. There are certain medical conditions that would prohibit someone from getting life insurance, and addiction is one of them as well. So it's important to understand that if you let a life insurance policy lapse that is in force, there's no guarantees you would ever get another one. So it's important. And where are those premium statements being mailed? If they're going to someone's home or they're going to an office, sometimes they get lost in the mail, but then we also need to make sure that they get paid. And then are they being paid on time? And underwriting based on age, like I said, age, health, medical history, addiction. There's so many things that play into an underwriting of a life insurance policy that it's really important to not let anything lapse. Don't stop paying on anything until you review it. So we'll go to the next slide. This is near and dear to my heart. So women in long-term care. 58% of men and 79% of women age 65 or older will need some form of long-term care at some point in their life. And what long-term care is really help when you're aging. So bathing, toileting, eating, dressing, transferring from the bed to a chair. If you're, let's just say we're a little old lady and we're 80 years old and we can't do those things on our own, a long-term care policy can provide income, tax-free money coming in to pay for that care. And why that's important is because as women, we want to plan and we want to protect ourselves so that we can live a long life and not have to rely on our children to take care of us. I joke with my kids that I have a long-term care policy because I don't want them having to come over and bathe me and toilet me and dress me. I want them to come over and watch Netflix with me and hang out. So I have a policy so that I preserve my independence and I can hire someone to do that. So let's talk about long-term care as it relates to divorce. And we can go to the next slide. So what happens in divorce is you're separating money. And sometimes there's a smaller pool of assets that could fund long-term care expenses. There's a lot of talk right now about women, and we call it the gray divorce, which is women that are getting divorced at age 50 or older. And the problem with that is that the earning capacity or the earning years are then shortened. And so how is that money going to accumulate at that time? So if you look at a long-term care policy, pre-divorce settlement or even after divorce settlement, it can provide security, protection, peace of mind, knowing that you have money coming in later should you need care. Now, there's hybrid policies that I really love because if you don't use the long-term care that the policy provides, there's a life insurance component that will pay out upon your death. So one way or another, let's say you're aging and you need care, or you pass away without needing care, the policy will pay out. And that's really a good peace of mind policy, knowing that there's a bucket of money for care later on. There are couples discounts that can be offered. So I worked with a woman recently who was getting a very amicable divorce, and she was concerned because she was in her 60s that she was going to be a burden on their 2 children later on in life. So in the divorce settlement, she was able to get a long-term care policy built in to her divorce settlement and paid for by her soon-to-be ex-husband. But we did do this before they got a divorce, and so there was a couple's discount that was able to be utilized at that time. There are a lot of flexible premium options, whether they're a single pay or maybe a 10 pay or a 20 pay, so you don't have to pay premiums for your entire life. And we'll go to the next slide. This is a sample of a client who's 55 years old who is paying $10,000 a year to get a long-term care policy. This is the premium schedule here. And then over here in the gray shows how much premium or how much income would be given out should she need care monthly. There's also a big bucket here. So I don't know if everyone can see it, but let's say, for example, in 30 years, this client will have over $400,000 to take care of herself tax-free in the event that she needs care. If she passes away without using the long-term care, $104,000 will be paid to her beneficiary. So it's a good leverage of dollars, and it's a good way to have tax-free money for care later on. We'll go to the next slide, which is a female who's just a little bit older, and this client is 62 years old, received the couple's discount because she was still married when she did this policy. And this policy is $25,000 a year, no further premiums after 4 years, and again, over $400,000 in leverage. So I'm happy to dive in on all these type of hybrid products. This is one carrier, which is Lincoln, but like I said, we have all carriers and we can work in all states. So I think what's really important, and we can go to the next slide, is your financial protection. Everyone sleeps at night knowing that they're protected and that they've planned. I think the biggest anxiety that we can have is when we don't have control of what's going on around us. So in a divorce or post-divorce, it's important to think about, how do you want to age and how do you want to be protected? And there are so many great products out there that can be tailored to your needs, whether you're a single female, married female, have kids, don't have kids, or you just want the protection regardless. We can look at the market and we can shop it. So the 3 takeaways are: know precisely what insurance policies are enforced, know how much they are, know who the owner, the beneficiary, and the payer are, and know how long they last. We can schedule a call. We are not attorneys, so we do not charge by the hour. We're here just to support women, and we're here to support all of you at Purse Strings and who want to talk about your policies. And then rest assured, you've done your due diligence. There's our contact information, and we are online. We have a website that you can look at, and there's so many great resources out there. With education comes some security, because then you know what you need to do. So I'll turn it back over to Maggie, and we can see if there's any questions.
Hello. That was a ton of great information. I would love to, anyone out there, love to know your thoughts, any comments, questions, reactions. Because I think I know this isn't a topic we talk about a lot. And sometimes people don't understand that you can do this before a divorce, or you have to think about the future you, which we talk about a lot is, you plan for today, but we also need to plan for tomorrow. So we do have some questions for you. And so you tell me that there are different carriers and you get to go shopping.
Yes.
What does that really mean, that you're shopping for me, and who are these carriers?
Well, we only work with A-rated carriers. So they're all the top carriers out in the marketplace. And what I mean by that is different carriers have different nuances for their underwriting. So there's certain carriers that don't like certain clients. And it's great to be able to move amongst the carriers to get the right carrier with the right pricing. There are carriers that will insure 2 clients together, like a joint policy. And then there are carriers that only do single policies. So depending on the client's age, marital status, and medical conditions, we can move amongst the carriers.
Interesting. And so then you showed us the one example of the long-term care that she purchased when she was married.
Yes.
Did that change at all when she's divorced, or can you still get that married discount once you're divorced?
That's a great question. As long as you're married when you buy the product or buy the policy, nothing changes. So if you pay the premium for those years, then nothing changes. And you know what's really interesting is, so for life insurance, men cost more than women.
Really?
For long-term care, women cost more than men. And the thought is, or the actuarial data behind that is that men die before women and women live longer than men. So if you look at the long-term care, you go to a nursing home, it's usually filled with women. So you've got women there, they're aging in place there. So with women, it's really important, if you can get that couple's discount, it boosts up the benefits. And so, certainly we're not going to place a policy today and then the divorce happens tomorrow. But divorces tend to take a long time, especially with the separation and then going through all the proceedings. So at the time when we did that policy, they were just talking about it and they were dividing things up. And again, they were very amicable. So that was nice. And she knows she's not going to be a burden on those kids.
Right. And as a kid, we also really appreciate that. Yes, I always tell my mom in these conversations, like, I don't want to wipe your butt, so do it for me. That's just not, like we said, you would rather hang out and just watch Netflix.
Exactly.
And so I think it's interesting, and there's not many policy or not many things I feel like where you can have somebody else pay for it, but you be the beneficiary.
Yep.
And that was just interesting when you brought that up, because I never knew that somebody else could pay for this product for you.
Yes.
So an ex-husband, or, I guess whoever else would pay for it for you.
Right. Well, and it makes sense. Okay, so what you need to remember is that the owner of the policy can make changes. So yes, the divorce decree would probably say, let's say the ex-husband owns the policy and pays for it, and then the ex-wife is the beneficiary. That's great, as long as he does what he's supposed to be doing, and as long as he doesn't change the beneficiary. The owner is the only one that can change the beneficiary. So certainly in a divorce decree, it would state that, so it's a legal document that says that. I actually have a very good friend who, she was the beneficiary on 2 life insurance policies, and they have a son. They had a son together. They were divorced for many years. I want to say 10 years. And he passed away about 3 months ago, and she got $1.5 million tax-free to take care of her and her son. And that's a huge relief. He unexpectedly passed away. But, if you think about the ramifications of not having a life insurance policy, her alimony would stop, her child support would stop. She's a single mom already. And, I don't know, things are not getting any less expensive right now.
No.
It's more about security. She has $1.5 million for her and her son. And that's a big deal.
Yeah. Keeping the house, knowing you can send him to school, knowing even if anything like medically goes wrong with kids. Exactly. My mom always tells me we're a crapshoot. So you just never know, you never know what you have to spend your money on. So that's, a lot of support, and, then they can mourn and do what they need to do.
Yes. And it's so important in the divorce arena, out of the divorce arena, planning and protecting with life insurance and long-term care. Like you said in my bio, dying too soon or living too long, both can be very problematic.
Right. Exactly.
Hi. Well, of course, I always have questions.
Yes.
So the biggest probably question you get, Dina, that we haven't addressed is cost.
Yes.
Because it's not cheap to buy these policies.
No.
At the front end, it seems very expensive. And when you look at the benefits, they well pay for your premium. But how do you have that conversation with your clients?
Right. So with life insurance, I believe in term insurance wholeheartedly. It's cheap, you can get a lot of it, and it's very, very inexpensive. So I always say something's better than nothing. And if it's just a 20-year term or a 30-year term, let's do it. Protect the family. When somebody passes away, we don't say, well, was it whole life insurance or was it term insurance? No. Did they have life insurance? That's always the question. And then for the long-term care, you're right. You're right, Dr. Barb, because what clients can do is you can do long-term care where you pay a smaller amount, but you pay until you go on claim. So in some respects, that could be 20 or 30 years of paying premium. The new hybrid policies shorten up that premium payment schedule. For example, I'm paying, but I'm only paying for 10 years. So these are my earning years. These are the years where I have money coming in for income. So what I like to do is model out with clients paying before they retire, so that when they retire, they have a paid up policy. And that doesn't mean that it stops growing. There's 3% compound inflation built in the policy. So the benefits are growing even though you're not paying premium any longer.
Got it. And the other thing that I did learn was, for those of us, and it's true that women are going to be coming into the largest transference of wealth through inheritance.
Yes.
So if you do get an inheritance and you're young, you can buy a long-term care policy in one fell swoop with a chunk of money and then be done, right? So can you talk a little bit about that?
Oh, thank you for bringing that up. I just worked with the most lovely couple, and they're 42 and 44, and they are so great. They did just inherit a large sum of money from his mother, and his mother unfortunately passed away from Alzheimer's. So he's very concerned about the genetic component of Alzheimer's. So they did a joint policy together where they're both on there, and they repositioned $120,000 as a single pay, never to pay premium again. And it's going to grow tax-free at 3% compounding for their monthly benefits. And when they need care, they're only 40. So when they need care in 30, 40 years, they're going to have these huge buckets of tax-free money for their care.
Wow.
It's great. You can do a single pay. It's all about repositioning assets. And then, I always get that, Dr. Barb, like you say, it's too expensive. The arms folded. I can't afford it. It's too expensive. Well, it's not too expensive. And there's different modeling with the different carriers that we can certainly look at.
Yeah, I agree with you. I mean, initial knee-jerk reaction, it seems like it is. But if you talk to an expert like Dina, you can talk about, what are you paying for? What are the benefits? And what are the different ways that I can work this into my either monthly, annual, or inheritance, or anything like that, that over the years, I can sit back and say, it's okay, I'm covered. Especially for women who are going to age alone. I mean, I say that over and over and over again. It's at a time where, it's very expensive to age alone. There's a time where you have a lot of medical and healthcare oversight that needs to be taken care of. And healthcare is so expensive these days. So I know, take a deep breath, right?
It is. It really is.
And so we want to make sure women are covered.
I really like that idea of purchasing it all at once. But I know you can purchase it like over 20 years, and it's only like $15, $20 a month.
It depends on.
I mean, it's easy to build. Like, if you do break it out, it is pretty easy to build in, because there are a lot of options, and sometimes that seems more bite-sizable than 120 up front. But I understand, if you get your inheritance like that, it's a great way to spend it.
Yeah.
And the more money you pay up front, the more benefits you get on the back end. So think about it. If you give the carrier more money in a lump sum, they'll give you more benefits later on. So that's
right.
Right. And I personally love the hybrid, the long-term care life insurance hybrid, because if you don't use one, you can use the other. So
something is going to happen.
Whether we like it or not, something's going to happen. So make sure we're covered, right? Yeah. So Dina's our go-to expert on all things long-term care, disability, and just an amazing financial professional who can give you the proper direction. She goes deep on these products. She knows them. We've had discussions about them. So cannot recommend you enough, Dina.
Thank you.
For anyone out there that wants to reach out to Dina, I wholeheartedly recommend her. Maggie, you can tell everyone how to find Dina.
Yep, Dina is here from BGA Insurance. You can always reach Dina at dinam@bgainsurance.com. She's also one of our wonderful Purse Strings approved professionals. So she is on the Purse Strings website, pursestrings.co. And yeah, reach out to Dina if you just have questions, if you're a little curious. Free 20-minute call. She'll be there. She can help you answer any of those extra questions that you have.
Yeah.
So this has been, say it again?
I'm passionate about this, as you can tell. Just love it.
Yeah, which is great. That's wonderful.
Yeah.
So this has been fun. Monday morning. We'll be here again next Monday, same time, same place. And we'll talk to everyone then. Thank you.
Thank you, Dina. Bye, everyone.